Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin and we are looking at Bank of America. It has been a long time since we've looked at a bank on most actives. Actually, it's probably last week when we looked at Bank of America. But what I find to be most shocking is that if you look at this red lettering with white background, it's been doing that for almost a full week now. That's 5 full days of time where the price of Bank of America has continually stayed at 3 standard deviations above its 23-day average, which is nuts to see. You can see here that even the volume isn't even kind of really supporting it anymore. Now it's just, I don't know if it's muscle memory or if it's index funds, if it's mutual fund managers, if it's big PMs who are just so far behind, or maybe it's the people in Bank of America whose options are like vesting and they want to be able to get a piece of the action because they know things are good and times are about to be great. I'm not sure. All I can say is that it's a little surprising to see the volume fall while the price continues to redline. We've gone positive on a 1 day, 5 day, 15 day, 1 month, and 3 month. We are getting within the place where with like 6 month, we could be very much making some hay here. Let's go back and see what the price is. So we need to stay, or at least Bank of America needs to stay above around, like, it needs to get above 35. It needs to get above 35 sometime soon for the 6 months to go positive. But even if it stays at 32, even for like the next like 2 months, eventually you're going to hit this comp against what looks like March. And that's when it gets real easy. And when is that? March is the 3rd month. So you need to be in the 9th month. So that's September. I mean, you're looking at what might end up being a really good setup here going into the fall for Bank of America. I mean, I don't have any shares, and this is not financial advice by any means, but I'm just looking at the data and just saying, wow, okay, things have changed. I mean, in the short term, the intermediate term, and longer term, we've got go long signals. We've gone bullish, bullish, bullish. And what I love, so by the way, for me, when you get 2 confirming long-term bullish signals after a sustained period of bearishness, right, which is 2 signals in a row or more, what you're going to say is that that's probably a good indication that things have changed. When it was at $28.53, that would have been a buy. Now you only had 1 go long signal at the time. You're still negative on a 3 month, a 1 month, a 15 day, and a 5 day. But you just have to trust the signals that you build for yourself if you build your own indicators, which I do. But when we look here at the rolling sentiment, I love what I'm seeing because we came out of a falling bear. We've essentially got to what is now like very overbought territory in terms of sentiment. But while we're doing it, let's go ahead and look at the weekly. And the reason I want to look at the weekly is because if you're looking for what would be like a massive trend change or like a new bull market in something, you'd want to see it really not only overpower on a weekly, you want to see it like make a significant move that becomes represented on the weekly chart as well. And if we're looking here, the weekly like sentiment indicator for Bank of America is at 42% bullishness. That's ridiculously low. Like it most of the time won't get below like 40 or like 38 is very low right there. We are breaking right back above, which is really good. I mean, that's like August of 2022, which I don't know if that was a great time necessarily. But it wasn't. This part right here, here's the thing, going sideways in this market after 2022 where you just collapsed, you'll take going sideways any day of the week. So the type of move that we could be possibly expecting here in Bank of America with the volume could be kind of remarkable. I mean, I'm going to go ahead and look. It does look a little overbought on the daily, but again, if the weekly is going to continue to fall through, there is no such thing as overbought because you have months of runway ahead of you. Look at the volatility. The volatility is essentially breaking out a little bit. The correlation is starting to go positive too, which is very nice to see. So you'd expect some that. So like that right there is probably more of an indication of what type of like muscle memory I'm talking about in the market, where the volatility or the volume is actually falling. It's actually not there as much as it was, right? It's falling relative to what it looked like even last week. But the derivative, which is the volatility and the correlation to the price, are showing that they need to go up because that is what their relationship does. If the volatility is rising and the correlation is rising, then price will be rising. And price will be rising quite aggressively. If you watch my previous video today about Rivian, you'll see the difference between the two kind of like trade ranges here. And the reason why I want to point this out is because when it comes to volatility, especially when it comes to volatility inside of an individual stock, you want to see a breakout from this kind of consolidated level where the range is really tight. And the reason why you want that is because that shows you that you could really get some like legs on this. And I'm actually just going to, for example, I'm going to quickly change to show you exactly what I mean here. When I start to look specifically at the difference between the Rivian trade range and the Bank of America trade range. And it's because the Rivian trade range, this right here is so emblematic of exactly what I think we might be able to see inside of Bank of America because the consolidation and the volatility was so tight and the absolute breakout in volatility and the absolute breakout in price gave you a gigantic move that is like, I mean, this is up like 100% in like a month. I mean, you were done at $13, you're done at $15, $14 just last month, pretty much like 20 days ago or 30 days ago, 20 days of trading. You're up like 100% because the volatility was so low at the time. So if I go back and I type in BAC for Bank of America, we're going to look at this again, and you're going to realize why it's so important to start looking at the way that a trade range kind of breaks out, the way that volatility is set up, because the volatility is what drives the size of this trade range. So I'm actually very curious about this. This has been a great move for Bank of America. It could be overdone, it could be overbought, but I don't necessarily see it because I still think the derivative of volatility and price correlation are going to make it keep running higher. We can see the ultra fast sentiment. That looks very nice. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And go ahead and subscribe to the New High newsletter. It comes out Sundays at 9 a.m. We give you 25 plus stocks breaking out for free. I'll talk to you soon.